Hello, everyone. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. We'll be starting our webinar in just a second. All right. Let me just first show you some disclosures. Now, if you want to go to tradestation.com, you go to the Insights button at the top of the main website. It'll take you through to our blog. And the blog Market Insights has the first blog post is a summary of some of the things we're going to be discussing today. We're also posting some important information in the chat. And it's great to be with everyone as always. All right. Very good. Okay. And all right. Lots of interesting things today. And here is our summary. Go here to Insights. Now to just kind of start off by just mentioning some of the things that are just kind of interestingly popping up here, which is kind of a spreading of the Goldilocks scenario. If there's anything like that, you could actually call this environment right now. Some of the economic data today just kind of confirms that we're in this kind of like a warm and cozy environment in terms of where things are from the macro perspective of inflation. Just kind of continuing, just kind of moderate, nothing really pressing in any frightening directions, and just a continuous drumbeat of positive things happening in technology. But there are some other things happening. So I wanted to talk to you about some interesting events coming up for AI and just more and more cases of how the AI theme is kind of spreading throughout the market. And I also want to talk about how there could be some potentially bullish things forming finally in energy, some of the patterns we're looking at. So I wanted to just kind of let you guys know that. Let me just, first of all, kind of close this. And I'm going to show you first the standardized returns of some various ETFs. So if you go here to the actual blog post at the very top, there's a zip file as usual. And at the top of the zip file, in the zip file, it has a series of of indicators and things like that. We haven't changed it recently, so it's the same one we've had before. And then you can also look at some of the ideas we've done on TradingView if you click through. But the main thing I want to show you here, let's just look very quickly at these standardized returns for a minute. And if you want to see the disclosures on any of these ETFs, any of the prospectuses, there's a link at the bottom of the blog post. All right. So I wanted to just kind of start off with, some interesting charts. We have earnings coming up this afternoon, kind of the last of some of the big tech earnings. The very bottom here, earnings tonight from Broadcom, Mongo Database, Marvell, and also some retailers, Costco and Gap. So I wanted to just kind of look at this. And, it was interesting. After that strong earnings report we had from NVIDIA, you actually look here. Let me just actually change. This is my Option Station Pro. I'm going to change this to Cyan Global. And what that's going to do is that's going to guarantee that anything I look at over here on this chart is going to pop up in the Option Station Pro. So right now I want to take a look actually at Broadcom. And so I was looking at Broadcom here, and the options to me, there didn't seem to be a lot of clear opportunities. Now, when we had done this webinar after the NVIDIA earnings, we said that, people looking for some opportunities after this earnings report, the stock had kind of gapped higher, and it was up here at that earnings report. And we had said that people, in a case like this, when something is run so much, people might want to be thinking about some kind of credit spread approach instead of paying money for options that were expensive because of volatility. A person could look to sell puts underneath something, some kind of put spread underneath. And as I look at Broadcom right now, I'm kind of seeing something kind of similar here. The options in Broadcom, I mean, this stock at this point, from my perspective, a company like this, when you have even a strong earnings report, it could drop for a few days, not significantly, have just kind of a bullish pullback, some consolidation, and those opportunities after the event. If you actually look at the pricing of the options, none of the spreads were looking like they really had a tremendous kind of risk reward over here in Option Station Pro. So I wanted to just kind of mention that was what I was thinking. The same sort of thing that we saw on NVIDIA after earnings, that could be an opportunity in Broadcom. However, there are some others I've been watching. Now, one of the names that we've been quietly watching here, it's not an AI stock. It's not, the most, popular stock now, but it continues to be in a very interesting scenario, is Netflix. And I wanted to mention here, looking at Netflix, and Netflix next earnings report is on the 16th of April. And a person might want to be looking here at Netflix and saying something like, well, given the history of strong earnings and the history of them improving their business based upon the password sharing, these other things they've done to improve their actual fundamentals, a person might want to look at something like the 19th of April expiration. And when you look at a stock right now, you can see here it's around $610. A person might want to be thinking about something, a move. Let's see. So we have our old highs, back around 650. Our old highs are above 650, around 690. So a person could even look at something like the 625 that, calls for it. They click on that 625, the ask right there, and they go down to like 650 and hold down the control button. And then you click on bid, you'll actually see that this spread is $25 wide and it costs about $9. So that's a potential payoff of more than kind of 200%. So I want to just kind of mention something like that with the stock with this kind of open space ahead of it potentially. The fact that it has really at this point no kind of clear stopping point until something higher up toward kind of 700. And from my perspective, a name like this now, one of the things we're going to get to in this webinar, actually, there's a lot of things I want to talk about. But I have my 7 catalysts for stock movement, and this company now is in the midst of a significant business transformation, and that's one of the key things I wanted to kind of quickly review. But this has some interesting momentum behind it. It's kind of under the radar. It used to be one of those, great FANG whatever stocks. It's not like it's a problematic stock. There's nothing wrong. The business has actually been recovering, but it just isn't some kind of glamorous AI stock that's like shooting over $1 trillion in market cap. But it still has an interesting trend in place. It has a lot of options liquidity. So this one was on my radar. Another thing we've been talking about was the potential for Exxon to break above a very important level here, which was this high right around 106. And, from my perspective here, something in Exxon, this one might have the potential to move up toward, even all the way up toward kind of 114. But, this is now something where when you look at this, the way this thing is really based out since November, when things escape from consolidation patterns like this, history is usually that they will kind of extend without a significant pullback. An example of that was something like what Citi did when it kind of came off this deep low. I mean, it wasn't really the same, but once it bottomed, it just, there were not any significant pullbacks. It was just kind of a pretty aggressive sort of move higher. And one of the things about Exxon is I'm going to be getting to some of the issues right now in energy that were kind of interesting. I want to look at Exxon. If you look at the 15th of March expiration in Exxon, something here that people might want to be thinking about. So like the 15th of March in Exxon, a person looking to do a spread in a name like this, the 109 to 111, that's basically $2 wide and it costs about 44 cents. So if the stock, by basically the end of next week, were to go up to 111 from where it is now, it'd be about 3% move in the stock. A strategy like this would make about 300%. Now, short-term strategy, but it's one of these things here where the tightness of the action in the stock and some of the other things that are potentially happening right now with energy, I wanted to kind of put that out there. We had, an energy draw this week. Most of the inventory data has been getting more bullish lately in oil, and some of the sentiment seems to be getting more positive right now in energy. So some of the other things that were just kind of popping up that I have in my rundown I wanted to go over. I'm going to close my Option Station Pro because sometimes when I do a webinar, it draws a lot of memory on my computer and there's something slowing it down. So I'm going to close that and move on to just looking at some basic chart things here. And I wanted to mention, we had done a report recently. If you actually look over here, about, I kind of called them the trouble trio, and I've been talking about these stocks a lot: Tesla, Apple, and Alphabet, but especially Tesla and Apple. We did this kind of special thing on these 3 tech stocks and kind of why they're struggling. If you want to check that out, it's on Market Insights. But of the 3, Alphabet is kind of the least tainted. So I wanted to kind of mention that, holding this down to the 200-day moving average here, right around this 130 level. This is something where this was more or less a support level from, back here. Was it the 14th of December? This kind of long tail. And so from my perspective here, something like Alphabet, I think Alphabet has been, just not terrifically run, and they've clearly missed the boat on a lot of things, but you're still talking about a company that has a lot of potential to turn things around. It's never well, it's not always wise to bet on turnarounds before you have confirmation of them actually happening. So from my perspective here, I think that the market is going to want to see more evidence of something like Alphabet here turning itself around. However, on a pullback like this, and the other thing is that Sundar Pichai can still kind of pull some kind of tricks out of his hat. He could do things like just announce a bunch of cost cuts or some sort of thing. There's a lot of negativity in this stock right now. So I want to mention at this point in time, something like Alphabet might be kind of at the end of its kind of sell off. Now, I'm about to do this idea on TradingView, but I can just show you the chart. It's going to be coming up. I think this is a TradingView chart. All right, so Verizon, I want to mention right now some potentially bearish patterns here in Verizon that were popping up. And to me, this is one that was just kind of interesting. This one also trades a lot of options. So this could be one that, to the downside might have some potential opportunities. This one just popped up for me today, but this is also kind of more looking to the potential downside, a name like this. Now, over here, a name that we've actually wrote about some and looked in the past is SL Green Realty. Now, it's not as well known of a company, but has a lot of short interest. They do office space in New York City. Again, a huge amount of negativity, and this kind of like high basing pattern like this is a pretty interesting sort of pattern where this stock had a lot of opportunity to pull back. If people wanted to sell it, they had a lot of opportunity, and I think this is a very interesting sort of pattern that I wanted to mention. SLG. It's a real estate investment trust, but it's a pretty fast moving sort of stock. Freeport McMoran. Now, let's just quickly actually show you. I want to just mention this. When I started my webinar, let's see if it's still true, if anything has changed. All right, it's still true. In the last month, materials are the top performing sector. Semiconductors have been on fire, yes. Biotech has been strong, but those are kind of industries inside. But as an overall sector, we talked about this thing that was happening in the materials ETF, the XLB, and we talked packaging stocks, and I know that they are, not high on a lot of people's radar, but we basically noticed how it broke out to this weekly high, went down and held the previous 52-week high, and just continued higher, and it has ever since then. So materials are quietly coming to life here, and this is exactly what we were kind of talking about, of the thematic spread into the cyclical stocks of the market is starting to like more. And with the idea of the Fed pausing, that is another sort of thing that is a potentially, positive thing for material stocks. So Freeport McMoran is a copper stock, and I've been kind of watching this. I think you can see there's this falling trend line, and then today it just kind of broke up through it. So from my perspective here, a name like Freeport, you can actually look at copper futures, which is HG, and this was starting to make something of a move today. If you look at them, they've kind of based out here. It's interesting to see, here we have the low in the fourth quarter, a higher low this quarter. We have higher lows, kind of on the monthlies. So this is something that has really taken a beating, for the last 2 years. And if we start to see the same sort of thing, the rotation toward materials, the kind of easing of the Fed and things like that, something like copper, is not an area where people have been active. Freeport McMoran trades a lot of options. It has been a momentum stock in the past. And I think it's interesting right here. I think you can see that we basically have this trend line. I've been watching this one for the last few weeks. I've been just noticing how it was just holding. And today it just jumped up through that level. So FCX. And then another name that is interesting is Square. The old block. I mean, I don't know if anyone calls this thing what its real name is. Anyway, SQ, the Jack Dorsey company. Let's look here at a Fibonacci price retracement, and let's look at the move. This was an earnings report, so we'll go from the close before earnings up to the high after earnings, and look at the 50% retracement, which we've more or less held here. So I think this is kind of interesting that we more or less held that, went down and held it. In fact, I think if you look back, I had drawn it another way. If you start at the previous candle, the day before earnings, you can see that this was actually there. But, one way or another, it's had this rally and this pullback. this is a name now that has a lot of interesting transformation happening in their business. It's interesting to look at some of these newer names, some of these kind of crazy growth names that came out that were kind of popular last decade that took a beating after the Fed started, raising interest rates. A lot of them remain well off their all-time highs, like Block. I mean, this thing was, if you look at this historically, this stock was like up. Yeah, look at this. So I mean, you're looking at a company here potentially has some space, and what they're doing is they're trying to grow. They turn their Cash App into a banking relationship. So this is something now where they could find new ways to monetize their customers in a whole new way. This name to me was one that really jumped on my radar, and seeing this kind of pullback and seeing it hold that pullback. Okay, good. So those are some charts I wanted to quickly show you. And now what I'm going to do is I'm going to close this, and I'm going to bring up a whole bunch of tabs, some things I want to talk about. Oops, it came up on the wrong screen. Bring this up over. It's going to come up in a second. All right, let me go back over and get once again. All right. I recently realized, I think Chrome did something recently. It seems to become more of a memory hog. I'm trying to kind of keep less tabs open because of that. But let's actually just go here to my blog post, because I have this other thing here that I want to talk about. I'm going to talk about. I want to draw your attention to the fact that we have. I'm first going to go down. It's these 7 catalysts for stock movement. You might want to just take a look at these. Hopefully, I'm going to have some time to get to them. But to me, they're an important sort of thing to kind of look at. Now, look at the S&P today, and I prepared these notes the day before, and what's interesting was there was something of a sort of level that had formed, and we're just kind of, I think that the biggest thing here when we look at the S&P is that I think the main thing is that this pattern continues to reassert itself, which is we hold the tight weekly lows. Look at that. We hold the low, the weekly low from last week, we held. We formed an outside week, and this was an outside week. This is the first outside week right now. I mean, we had a lower low and now a higher high. It's the first one that we've had. But it's just interesting to see. We keep seeing these tight weekly lows holding from right there. We had another one form right here. This was a Monday right here, and see this weekly low. It held that weekly low right there, continued higher, went down. This was the weekly low from last week, continued higher. So these tight weekly lows just continue to hold at this point in time. All right, so all right, it looks like everything is okay with the audio. We have a few messages. All right, so I want to just zip through some of these articles I have now. Now, I use this thing called Tabboox. I've used it. It's an interesting sort of thing that allows you to save a whole bunch of tabs in Chrome. But I have to reload them here really quickly. I just use it as a little tool sometimes because it allows me to save a bunch of tabs and articles I want to talk about, a day or two before the webinar, and then I can just pull them all up at a time. So I'm going to now just start off, and what was really interesting to me here, let's just reload this one, is that basically there's a series of things happening, and there's some events coming up. There's 2 potential AI events coming up, and a bunch of other AI things that are kind of happening. But what's interesting here is this was Schwab has recently started doing a bunch of analysis on their customers. But what they basically said was that customer activity, people are trying to trade more, be more bullish on stocks. And so it's just another sign of this kind of widening sort of, I don't want to call it complacency, because markets go through phases. But essentially, like I said, with the recent breakout, we had the new 52-week highs or new all-time highs, at the beginning of the year. We're only like 2 months away from that breakout, probably not even 2 months yet. So, it takes time before things get bearish. Things actually go from being good. Typically, they go from being kind of good to better to complacent and then to being bad. And so the thing is, we're not near that point yet. We're at the point now where like the sentiment continues to be positive and the breadth continues to widen. But this is an interesting article. It just kind of said that more clients bought equities and sold in February. So this is the main thing I wanted to show. Cautious optimism. So that was the interesting sort of takeaway from Schwab, which is one of the biggest brokerages in the country. All right, then we have the housing market continues to add value buoyed by supply shortage. Let's go back over here to our MT main workspace. Let's look on a year-to-date basis. Kind of interesting to see here. ITB, the home builders are, I mean, chips are leading, but the home builders are not terribly, I mean, they are far behind, but they are also outperforming. So home builders remain one of the strongest parts of the market overall. I think that's just an important thing that we continue to see here to remember that in the background, AI is not the only thing. We have a significant trend happening right now with the housing market. So that supply shortage continues to drive home values. Another thing today, was housing sentiment. So this showed that people are now increasingly saying it's a good time to sell a house. Now, I continue to believe that's a very important thing because there's a shortage of supply. And so the thing is the more people who own houses who are willing to sell them, the better the condition you're going to get. And I mean, I know it's kind of like counterintuitive, but I continue to believe that if the Fed were to cut rates, it would lower inflation because I believe that what you'd see is you would basically see a significant amount of homes changing hands, and you'd actually see their prices go down because most people still have their home values in their minds from 2021 when rates were much lower. So the thing is that if they have to adjust to the higher interest rate environment and they say, now I'm just going to sell, rates have come down, now it's time to move, you're going to get price discovery. And I think one of the things people have to remember is that the worst thing for any kind of market is when it gets frozen. Liquidity is always a great thing for people who are active in markets. And the housing market's been less liquid. People have been reluctant to transact. Things have been sloppy and difficult, and low inventory. And that's never, a great thing for a market to function. So it's interesting to see this coming around. And from my perspective, this is something that could actually add to the disinflationary sort of thing. As we know, housing is like a third of home prices, and people start to sell. We're going to see people leaving their houses. We're going to see people starting to buy who are in apartments, and this long awaited decline of rental inflation might actually start kicking in. In fact, I had something here. It was some guy on, I'm going to get to it. Was it? All right. It was actually similar to that. So this guy, I'm not sure who he is, but it was an interesting thing that I think Carlos Quintanilla from CNBC, but he basically said that, you know, rents, if you stay in your apartment and you renew, the renewal rent is not going up anymore. And so that was another thing because, like he says, some of the indexes look at new rents, but you should be looking at renewals. And it was an interesting sort of article. In February, in basically last month, people staying had their rent go up 2.7%. A year ago, people staying had their rent go up 10%. So again, less inflation. All right. So I'm just zipping through these things. Bank of America raised its target on the S&P. But what was interesting was that so this lady Savita Subramanian, she raised it from 5,000 to 5,400. She cited a series of things, mostly things like earnings growth, lower inflation, increased risk appetite, stuff like that. But she was actually saying that we'll likely have some kind of pullback soon. Who even knows on something like that? I want to just kind of highlight this here. Um, a lot of the things I look at kind of made me think that we're getting nearer the spot where we might see more of a pause. But the thing is that when something is running, one of the easiest mistakes to make is to become too soon. And I think it's important to realize that right now there is really nothing giving us a sign like holding that tight weekly low. That was a real interesting pattern yesterday. All right. So Target. Now this was interesting because one of the big things here is that the profitability was through the roof in Target. Their earnings went up a lot. I'm not sure, but their earnings beat estimates by a wide margin, even though revenue missed. So there's an example of what can happen when a company turns around their margins. Now remember, margins are one of the 7 key catalysts of price movement, and we're going to get to that. But I want to just show you that, like, we hear all these things, you're throwing these terms, margins and growth and blah, blah, blah. But I think I actually have come up with a method to understand these things simply, a kind of way to diagnose something regardless of what the sector is, and to understand why things are moving on news. And that's what I'm going to be getting to. Again, Apple just, clicked on an ad by accident. Apple just remains, in a difficult spot here, kind of no matter how you look at it. And from my perspective, we talked about this in a webinar a week or two ago. I'm pretty sure it was last week. We said Apple was at risk of breaking 180, which it did, and had that continuation to the downside. And at this point, I mean, obviously there's a lot of negativity in it, and something in this spot has that potential for stabilization and a rebound. But I would look at a name like Tesla and see how it kind of had this. It stabilized, rallied back up the Keltner channel, back to the 21-day. Then we had that continuation to the downside. So for people looking to play the downside in Apple, we've given you guys some tools. If you actually look here, I'm going to actually just show you on our price grid. On my price grid, I added the NASDAQ 100. So for example, I wanted to point out that in the last week, aside from CEG, which is this is like a one-off utility stock that's been rallying, Constellation Energy, chip stock, chip stock, chip stock, chip stock, chip, semi, this is not, but basically, all right, so basically of the 10 best, I think we have 7 or 8, like 7 chip stocks in the last 10 weeks, in the last 10 days on the NASDAQ 100. So that's kind of interesting. But now remember, we have something here like this Keltner pullback. Now this can be used looking for bearish opportunities. If you look at this and it says, for example, Costco, this means that it's basically 200% above its Keltner channel, right? This is the Keltner channel. It's way above that. What it does is it takes this range, and when it says 200, if it was right here, that's 100. So it's an entire Keltner channel above the top of its Keltner channel. The Keltner channel is the average true range. But anyway, the higher the number, it means that it's in an overbought condition. But say, for example, you want to see something like, Apple, and you're bearish on Apple. Well, right now, Apple is below its Keltner channel because it's under the Keltner channel. Because if it was at the bottom of its Keltner channel, I think I have it set to be at 0. So when it's under 0, it means it's under the Keltner channel. So the thing is, for people who want to be looking to be short something like Apple, using the Keltner pullback tool, letting it get back close to 100, or kind of a little over 100, something like that. Excuse me. Basically, that is a method you can use, and that's one of the great things about Radar Screen is that you can be looking at your stocks really quickly and sorting them based on the Keltner. Let me just hide my picture here. You can then sort them based on the where they are in the position of the Keltner channel. It's a simple sort of tool that I was able to create using easy language, and I find it an easy, simple go-to thing to just tell me quickly where something is in terms of its near-term recent trending range. All right. So this is an example here of faster deliveries. All right, so this is ISM Services. Basically a little light, but the key thing is faster supplier deliveries. That is a sign of deflationary, less pricing pressure. Prices eased. Employment was a little weak. Now, again, it's not like this falling into a recession. It's like it's just kind of moderating enough to keep us in a happy place for Goldilocks. And that's kind of what I wanted to be saying here is that, this Goldilocks scenario just remains in place. Okay. This is Jerome Powell yesterday speaking in the Senate. What was it? The Banking Committee. No, this is Banking House. It's the Senate, right? He's in the Senate one day and the House the next. But the key thing was he basically said policy is likely at its peak, and we're going to wait until we have greater confidence about inflation being down before we cut interest rates. But again, no news is good news. They went from being super mean to not so mean to now they're kind of nice. Now they're kind of moderate, and then they'll get kind and gentle and loving later. So the thing is, it's this pendulum, and you're just kind of going back and forth of different degrees of tightness. And the Fed, it's really the way to think about them. They're just going to go from being super hawkish to moderate to dovish, and it's just basically a battleship turning. And at this point, we're just getting more confirmation that we're moving away from that hawkishness that we've seen in the last 18 to 24 months. What do I have here? This is an article where basically said that there's a series of ETFs that do covered call strategies. I don't know much about these, but it was from the Bank of International Settlements, which is a pretty credible organization. that basically said, people thought that people doing zero data expiration options was triggering, was keeping the VIX low. Um, in my perspective, one of the key things is that we don't have a lot of leverage in the system, and in my opinion, typically what you see is correlation when people get leveraged. Then what happens is you get more correlation. They all like go leverage the same way. Then when an asset starts to fall, they all sell at the same time. And then the VIX moves on that. But it is interesting that these people said that there's buy right strategies. So, my view is essentially that everything kind of comes down to leverage, and there's not a lot of leverage in the market now, not a lot of margin, and I don't know if there's a lot of people selling volatility the way they have in previous years, well, at least in terms of selling things like the VIX. But I think the key thing here is that um, none of this really points toward any kind of overall problem right now, or of any real negative things building. I thought it was interesting that there's a structural thing in place to limit volatility. Now, it's interesting here is hedge funds are betting on U.S. real estate rebound. It's interesting. New York Community Bank, and this company is just going to be irrelevant. Who really? I mean, this bank will just disappear, or even if they continue. I mean, as a stock, their market cap and everything will just kind of fade. The market will not be too concerned about it. But it is interesting now to see hedge funds are starting to buy commercial real estate positions. Now, remember, I did mention this thing about SLG. This would be one of those sort of companies where they might potentially look. So I wanted to just kind of point that out. And it sure is interesting to see it holding above that old 52-week high here. And even if you look, even though it's a red day today, you can see it's a higher low. So this is an interesting one. All right. Anyway, hedge funds betting on U.S. real estate rebound. So another sort of piece in the puzzle. All right. A lot of tech AI stuff. Micron had a big sort of call of basically Stiefel saying that it's a big AI name that's not being appreciated, saying people are way too sort of not bullish enough on the name. That was an interesting one I wanted to mention here. All right, NVIDIA and ARM had bullish notes on at Mizuho. I mean, these are just basically continuations of what we all know, but I want to just point out that like this drumbeat just continues. All right, we had here. I know this was interesting. So there's two things coming up. Let me actually do NVIDIA first. So put this on your calendar. They're going to be doing NVIDIA. Now, a year ago when the AI boom started, it was this GTC event. And basically, it's going to be this year, March 18th to 21st, which is in like a week and a half or something. And so that's an important one. And remember, that could definitely have some interest. And then the other one is Microsoft announces something, this Copilot thing. All right, here's the actual thing. So you might want to just Google Modern Work Announce Event. What's it called? Anyway, it's a Google. It's called the New Era of Work. If you want to Google New Era of Work, Microsoft thing, it involves this Copilot. So now Microsoft's getting out there and trying to do the whole Steve Jobs thing, get up there on the stage and or whatever it is, that they're going to be presenting, and they're going to create buzz. Now we're starting to see this sort of excitement around these sort of things again, and it's spreading. So I wanted to point out these two events. We have it on March 21st, and the other one is going to be on March 18th through 21st. So, okay. Okay, Salesforce announces new AI tools for healthcare workers. Everyone is jumping on the bandwagon. Oracle, now this was interesting to me. UBS raised the price target on this. There's not a lot of mention of AI here. But, I mean, I'm just saying at this point in time, a name like Oracle is going to be something where it could be something where it starts to get some interest. And you would think that a company like this at a certain point could have some opportunity to start kind of pulling, making announcements and doing things. So I'm not, and this is not like any kind of speculation. I'm just saying Oracle is a major stock, and it was doing actually pretty well back before it had a big business transformation of cloud growth. If we look back to, see, I mean, my memory is, I'm overtaxing my computer, but basically, if you look back on Oracle, it did actually have an interesting sort of rally back before the Fed got hawkish. had this significant rally, and it's kind of consolidating here. And so I think here you're looking at a company where it hasn't done any AI yet, and the earnings are coming up on the 11th. So this is one also that it's interesting to see this kind of note. They said that it's bullishness toward earnings. The decision from UBS was based on discussions with customers, a major partner, and industry analysts, and then basically saying there's going to be increased demand. So I want to just kind of point this out. This is one that it's been in a long-term uptrend. It's done nothing here really for about, I guess, 9 months. And here it is at the 200-day moving average. So another name that trades a lot of options. Now, Cognizant. This is, I think, an Indian outsourcing company, but this name is also, this company announced an AI lab in San Francisco. So now they're opening some kind of AI lab. The new facility is dedicated to the research and development of AI technologies. CTSH is Cognizant. It's been trending higher, so it's just kind of interesting here that, again, this AI thing is spreading. It's people jumping on the on the kind of bandwagon of seeing it kind of develop and spread. And it's not like necessarily these things are immediately newsworthy items, but I think we're just kind of seeing the kind of mainstreaming of this narrative. Oops, what was that? Let me try and get, wait a second. There's this AMD thing. AMD stock is a positive nod from Mizuho. So that's just, this is part of the same narrative I was talking about. Just a kind of continuous spreading of the AI story. All right, now some other names that have been popping up. Edward Life Sciences, we kind of have talked about the medical devices. EW had an interesting earnings report. Look how they rallied on earnings to get the upgrade today. We talked about Agilent Technologies wanting to kind of break out here. And you can see also, look at this tight range, had this move continuation. So I think right now, we've talked about the fact that business, Agilent is the letter A. We believe that there's evidence that the activity is increasing in the healthcare industry. We saw accelerated hiring in healthcare. We've seen things like prices increasing. We've seen evidence anecdotally from things like United Healthcare complaining about the fact that they have to pay more for people using their health insurance. So all those things kind of point in a positive direction for the medical devices. They're kind of like the Halliburton for, if you're going to be getting something done, when you go to the doctor, they're going to be using things like Edward Life Sciences and Agilent Technologies. So these are the actual device makers that drive healthcare. And so I wanted to kind of point that out. This one was an interesting one to see this move in Edwards, and we had talked about Agilent. So these keep popping up. Oops, what's this? Kroger. Now, I'm not saying there's anything we can necessarily do with this right here, but KR, I want to point out that we've seen this pattern. A lot of these stocks that have suffered for the last 18 to 24 months, kind of like Kroger was not participating in the bull market. But then you see this like these weekly highs, and it breaks out. It's not that different from what we said about materials. This pattern of multi-week basing, see, not quite the same because it didn't drop as much. Multi-week highs with a breakout. Look at Square now. This is why I think Square is interesting. Multi-week highs. What if it breaks out through 80, 81? Interesting. I want to just point that out. So anyway, KR, this pattern keeps popping up. A name like this also probably does not have a lot of entrenched longs. But if you're using your earnings dates, if you go here to the earnings date tab, I'm not going to pull them all in now, but you can see companies that are reporting earnings. You can plan for them. You can look at them. And like, there's a strategy I was actually doing last earnings season, and I actually had some decent success with it, which was basically looking for stocks that had good earnings that had been in a tight price range and just chasing that, just more or less buying at the open, and they almost all of them, they were profitable. I think it did General Dynamics. It had this earnings report. I traded this. I traded, I can tell you these because now they're all closed, but I did PACCAR, PCAR, basically on one of these. I think the earnings was right here. What I noticed was it had been in a tight range. It hadn't gone anywhere for about a month. You get the good earnings, and it just extends. And so a name like Kroger is a similar sort of thing. Now, we've been talking about this pattern on GoDaddy, and GoDaddy was also in this long, tight sort of, you can see, once it broke that weekly high, it didn't stop. So I think the thing is, we've seen this pattern. It's not exactly like getting a pullback. It is something of a chasing. Now, trying to chase breakouts can be difficult, and usually is buying highs is it can be a good way to lose money. But what I've noticed is that when you have the presence of this sort of tight pattern that goes back over a period of a year or two, and then you get the breakout from that on the news, the early quick jumping in has been working in the last earnings season. So it's interesting to see that, and interesting to see it in Kroger. So one of the ways you can plan for it is by looking at something. You can go to like the earnings dates. I don't have time to do this now. I just thought of this, but you can say, I want to see stocks that are reporting earnings, and then I want to see how long it's been since they hit a 52-week high. And if you might see right off the bat, wow, this stock hasn't made a new 52-week high in over a year, you can go to days since 52-week high, which is in our price grid. This thing, days since 52-week high low, it tells you how recently that was, and then you can actually maybe start to anticipate things based on that. So I want to just tell you, this pattern seems to keep popping up recently. All right. Pentair. Now, I mean, this is a pretty, PNTR, no, PNR. This is HVAC sort of stuff. But again, now you have something here where, I mean, this one has been running. However, it is breaking out to a new all-time high. And this is interesting because these industrial names have been really moving, and we've been talking about them a bunch of different points in time. We were talking about the breakout in industrials. I'm pretty sure we did a trading view idea on industrials back here when again, it's the weekly chart. We've been looking at these weekly charts, and it's been working. We talked to you about the weekly breakout, the consolidation for a week or two after, and now continuation. So this weekly breakout pattern continues to kind of give us opportunities. Okay, let me try this again. Oh, I want to just mention, getting back to the inflation thing, I saw the Manheim used car index. This is this guy from Calculated Risk. Basically just continues to show a decline in used car prices. It's just kind of an interesting factoid that fits into the inflation. I think used car prices are about 6 or 7% of CPI, maybe 5, but they are substantial, and they have driven inflation in recent years. Okay, another kind of little dovish narrative. The ECB lays the groundwork for a June rate cut. Basically, Christine Lagarde, what did she say? We are just beginning to discuss the dialing back of our restrictive stance. There you go. And then she said it's more likely to happen at the June meeting. All right, so anyway, there you go. The dovish narrative just keeps kind of building. All right, here's another little piece of the dovish narrative. Productivity rose a little more than expected, but more importantly, unit labor costs rose 0.4% versus 0.7%. Massive, miss, but in a good way. Now, I've talked about this a lot. I'm not sure if maybe some of you guys are new from watching on YouTube, but back when this rally was starting at the beginning of November, we had a number like this. It was a revision of the unit labor costs and productivity, and it was insanely positive. Basically, what it was saying was inflation's not as bad as we think. Unit labor costs are not going up as much. Workers are more productive. And now we're seeing the same trend again. So when you start to see data consistently beating in one direction, it basically tells you something. So again, I think that right now, this idea of inflationary pressures, we're getting a lot of evidence that it's fading away. We're seeing the productivity. Now, we might just see a situation where prices don't come down that much, but we just see massive increases in productivity, and these things will all balance out over time. And I think it's just interesting, though. You're talking about a lot of different data points at any point in time, and they all come together into what the prices are in the economy over time. But the thing is that all the inputs that drive inflation, like if that rental thing comes down the way that guy was saying that I showed you on Twitter, If the used car prices come down, if the productivity keeps improving, all those things just keep pushing in that direction of interest rates coming down, inflation coming down, and the market looking out and seeing things like an easier environment. And what does that mean for M&A? What does that mean for companies that have leverage? What does it mean for that narrative that can spread to the smaller companies? Right now, there's been this focus on the mega cap tech, and it just won't go away for now. But the thing is, later in the year, we have those other kind of narratives that can come off the bench. So this is a bull market that still has a lot of opportunities in it. All right. Well, it potentially has a lot of opportunities in it. You never really know, what the future brings. But I want to just point out that these things continue to kind of confirm the narrative that emerged so forcefully at the end of October and early November. This is perhaps, in my view, the single most important thing because um, this is just, well, it's part of the 90s. In the 90s, we had this huge productivity surge. And I have personally, anecdotally speculated that we're going to see increased productivity because of the investment that was made during COVID. People, I don't have the data. It'd be interesting. I'm not even sure where to get this data, but business travel. I know that I used to make a lot more business trips than I do now. And I'm betting I'm not the only person. So basically, people now using Zoom and these other technologies, you know, a person can do the same amount of work and the company has to spend less on them doing that work. That's increased productivity. So the thing is, I believe, and we definitely saw this coming out of the previous tech boom. Let's not forget that the spread of remote working was a mini tech revolution that happened. And even if people aren't all working from home anymore, the innovations that it brought and the productivity enhancements it brought will be trickling through. And I would just add that it's unlikely that the data that we're seeing right here is from AI. It's probably from Zoom calls and the COVID investments. Well, what happens when AI kicks in a few more quarters? What does that do to productivity? All right. So, I mean, there's things when you look out into the future that you can see why people, can kind of be optimistic. All right. This is just Tesla. Morgan Stanley warned, of course, deceleration in electric vehicle demands and that fleets are dumping EV plans. So basically, rental cars. We saw this, Hertz. We talked about it at the time, and hybrids are competing. I continue to believe, honestly, and I think that this is a narrative that maybe other people will use, but ultimately, Apple iPhones and Tesla cars are just consumer electronics, and there's going to be a race to the bottom in pricing. And I think it's a difficult spot to be in. And that's why I think are ultimately the real kind of problems with Apple. Apple is, for a company that makes consumer electronics, it trades at a pretty high multiple, and so does Tesla. And, you can look at consumer electronic, or you can look at it as a car, and one way or another, however you compare it to other companies, you're looking at companies that have very high multiples and slowing growth. And that is something that is just kind of not what people want to be overpaying for, and there's other opportunities. All right, those are the main things I wanted to cover here. Also, just continued growth in semiconductor sales. I wanted to point out we had this thing here, the Trouble Trio. I'm now close this and go to my rundown, and I want to just kind of go through and finish by talking about what I consider are just some ways to conceptualize. But before I do that, I want to show you, I did this thing with the first bar of the week and first bar of the month. And there's an explanation at the bottom. I find it useful because if you're looking at an intraday chart, I'm not going to have time to do this now. It will show you, it can transcend time frames. So you can be looking at a 1 minute chart and it can still see the first bar of the month or the first bar of the week and highlight it. A lot of other things, like if you're using moving averages and you go to like a 5 minute chart or a weekly chart or a 15-minute chart, it's going to use the period of the chart. The cool thing about this tool is that it can actually show you, it can see, regardless, it can actually see a month on an intraday chart, which is a really useful thing sometimes, because sometimes I like to look at hourly charts, and I have a chart space that I set up and I look at, and I can see there's the Monday. And I can see the beginning of each week, even though I'm looking at an hourly chart, it highlights it and it draws it purple for me. So I wanted to kind of show these. This was what I was going to highlight. All right. The other thing I wanted to point out, actually just very quickly, is oil, commitment of traders. I thought it was kind of interesting here to see when we look at oil. is that this is a commitment of traders. And what you do is you go to study, if you're on a futures, you go to studies. This is commitment of trader net position. It's called COT net position. And I made this sticker, this purple line. These are the non-commercial. So these are things like hedge funds and investors. What's interesting is we're starting to see a basing out here of people wanting to be long oil, starting to tick higher. Now you can see at other times, like when this fell, it kind of, as it was falling, I mean, it's not going to be exact, but it shows you less and less speculative froth in energy, and then the price declines happen. You can see it here as well. This is way back in 2014, and you can see that as the bullish, positioning came off, oil crashed. And then you can also see this was especially noteworthy last summer. We saw it really started ticking up as energy kind of held. So this is crude oil here, and I think one of the big things that we're seeing recently, like I mentioned with materials, there's this focus on the cyclical stocks, materials, industrials, and energy would typically, traditionally be in that club, and it hasn't been. But now it is starting to show some potential reasons to think that it might. Now we've talked about things like the inventory issue, the increasing American supply, and all of that. However, at this point in time, we've seen um, draws recently of oil getting pulled down, people starting to get a little more bullish toward it. So I want to just kind of put this out here on the on crude oil and just mention that we might be starting to be at the point here where people are going to be look to be riding energy more over to the upside. Um, Now let's look at these key things I wanted to end with very quickly. I mentioned most of these. I also, let me just very quickly mention payrolls tomorrow, CPI on Tuesday. Those are kind of the big things to be aware of. Now, I believe from having looked at stocks now for over 20 years in different ways, writing about them, analyzing them, discussing them with clients. In my opinion, there's seven key catalysts, I call them, for stock movement. The first one is volumes. So a company is doing more business or less business. Now, it's important to realize that when a company gets an order, or when a biotech company has a drug that's approved or it works or whatever, the market will price in future volumes. So I might get an order from someone and I don't get paid until I deliver whatever that thing is, but the market will price it in beforehand. That's why with software companies, you look at things like the book to bill ratio. It's why you look at things like the bookings for different businesses. And then for things like Netflix, wow, we get more subscriptions. It doesn't move on revenue. It moves on subscriptions because the analysts just take that subscription number, put it in their spreadsheet, and it spits out a revenue number. And basically, that is the underlying question. So very often you look at growth, revenue is the obvious thing, but it is often preceded by something like orders. So it's important to kind of understand that it's all the same thing. We're talking about volume. A company is doing more business. Volume is this catalyst. So when a company's, this is this is the single most important, in my opinion, catalyst. Doing more business or doing less business, the stock goes up or down. So when you read an earnings report and something is happening, you can actually say, what is this? Is this a volume story or is it a margin story? So what are margins? I think we know essentially what profit margins are, but margins can essentially move based on your costs going up or down and your selling prices going up and down. And that's essentially what's happening. So you look at a company like Target, what's happened is they had a bunch of merchandise, they had to mark it down, it destroyed their margins because their selling prices went down. But now they come back, they got rid of the inventory, they're selling at higher prices, now their margins go higher. And you can see this in a lot of different companies. So margins are another really common sort of thing. I also add that when companies are selling new products, in-demand products, when you're selling a lot of volume, you're not going to be marking down prices. So therefore, volumes have a pretty clear relationship to margins. When you have good volumes, you typically are going to see the margins improve and vice versa. So these things move in tandem, but they don't always. You could just have a consumer stock. Like sometimes you'll have some consumer product company like General Mills or something that somehow manages to they start selling a new kind of cereal, or they change the box size or something, and the margins go up and the stock will rally. And that happens sometimes too. And there's tinkering like that that management can do. Another big thing is the macro trends of things like what's happening in the economy and interest rates. Like right now, the market sees a stronger cyclical economy. Therefore, it's getting bullish on materials. The market thinks the Fed is near cutting interest rates. Therefore, that's also pushing down the dollar, positive for materials. That's an example. Something like the AI thing is also a sort of macro trend. People are buying the AI stocks before they even necessarily have the news because there's a bigger trend happening. These things tie together, but they are separate events. They are separate sort of catalysts. Another big thing is just strategic actions. And that means when a company does something that changes essentially their structure of their capital structure. So for example, if they borrow more money to buy back stock, that changes their financial engine, like their actual financial structure. They spin off a business, they pay a dividend. It doesn't change their business. It changes the nature of what they are as a financial entity. Those are strategic actions. Like getting acquired is the most obvious strategic action, but there are others. You have a private equity guy come in or an activist investor, and he says, buy back stock. And then they go and they borrow money, they buy back stock, and maybe they drive the stock up that way. That's a strategic action. But another one, I'm going to get to it, but business transformation is something different. Credit is essentially when things are happening in the credit market, when your borrowing costs go up or down, or when your assets are worth more or less. And that's something we saw with the banks last year. But it's just important to realize because as interest rates come down, companies that have a lot of debt, I mean, if they do continue to come down, companies that have a lot of debt can just naturally get a boost from that simply because as they issue more debt in the future, their borrowing costs will come down. Borrowing costs for them is the same thing as like paying workers or anything else. The costs go down. That means down the road, they're going to make more money. So I mean, then it becomes a margin story, I guess, but ultimately the real story here is how much debt do they have? So credit is an item there. And if you can't refinance your debt, then you're in big trouble, and then stock often goes down a lot, kind of like we're seeing with New York Community Bank Corp right now. Business transformation is what we're seeing in names like NVIDIA. NVIDIA was, a graphics chip, and now they're AI. And when a company transforms from one kind of business model to another, look at how Netflix is now changing to having free viewers with ads. That is a new business model. And when companies go, usually a company has something, oh, we have an old business model that's not as good. We're going to introduce a new one. Investors are going to look for confirmation that the new business, the business transformation is actually succeeding. And that's going to be something that I think it's going to be interesting to see with Oracle. They started to actually change their business to more cloud computing. The thing is now, are they going to start pulling AI out as a potential thing that will change their business? So the thing is, when companies change their business, they usually do it because they're going from something bad or not great to something better. And the market will then reward it when it happens, or can potentially reward it. In my opinion, the single biggest business transformation that I've seen in my career was the change of software companies to, subscription models away from the old thing when you bought a big DVD for like, $1,000 and you installed it on your computer and it took like 5 hours. And this whole thing now of just you get Adobe online and you pay like 70 or 80 bucks or $100 a month. That business model happened last, kind of coming out of like the financial crisis, and it completely revolutionized the software industry. Dozens of hundreds of companies changed their business based on that transformation. So that's another thing. The key thing about business transformation is when the company is successfully achieving it, then that's a good thing, and vice versa if they struggle to make it happen. The final thing is investor rotation. You simply sometimes see investors are like, they stampede, they're like sheep into, they're all, a herd mentality into one sort of sector. Right now, it's a growth AI thing. At other times, it's been something else. But you can sometimes see these clear patterns of investor rotation. It often happens like around quarters. Like at the beginning of 2022, energy just had an explosive rally for 2 quarters and it was over. It was a fairly obvious example of investor rotation. And it usually is associated with these different things above. Usually they do it for one of these reasons, like business transformation, volumes, that's AI. AI can fall under those, and now the investors are rotating to them. All right, now I'll just mention that when a company has some kind of legal or regulatory risk, that can also move the stock. But typically, it's like, oh, the government is telling you you cannot compete a certain way, antitrust or something. That's going to impact something like margins. It's going to impact something like volumes. When there's a legal thing, it typically impacts one of these other areas. So I didn't really want to put it there because legal regulatory risk, it tells you something that you can or cannot do, and that in turn has that impact. So I want to just, clarify that. So great to talk to everyone. I want to just kind of share this because I think it's conceptually useful when things, come out, to be kind of looking and to understand what is happening. And this allows you to quickly diagnose things that you might not understand, putting them in this framework. It has helped me. And when I look at things, I try to look at them essentially, especially under volumes, margins, macro trends. These are really the big ones here, and then sometimes business transformation. Those are going to be your most common ones. Things like credit don't come up that often. Strategic actions are not as common as they used to be, but those are the big sort of things I wanted to emphasize. So I hope everyone has a great day. We'll see you again next week. Remember, we do these every Thursday at 2 p.m. Great to be with everyone. Thank you very much.